All right, what's going on, everybody? Welcome back to the channel. Yes, I'm wearing the same shirt that I think I wore in yesterday's video. And I'm always wearing white tees. For those of you hating because I'm always in a white tee, I always wear white tees. That's like my thing. That's what I wear. It's what I'm most comfortable in, you know. I'm kind of just bumming around all day. Not really, but you guys know how it is. So, yeah, I want to talk in this video about what's going on with the markets, right? We had, I think, all three indexes yesterday closing at all-time highs. I know the SPY did, the NASDAQ as well. And we kind of had like a mini, I guess we could call it a flash crash. Some people were getting on me about, you know, calling it a crash the other day. But that's what it was. It was like a flash crash, you know. The institutions put a lot of selling pressure on the global markets. I think it was like Thursday night, and then they completely rebounded on Friday, which, you know, for people that are in the markets, that's great. That's fantastic. But there's a lot of people who are not in the markets, and they're looking at the markets right now, and they're thinking, I'm missing out, right? There's tons of people that are, you know, they're feeling the FOMO right now. They're thinking, I'm missing out. You know, 2020, people made so many gains. 2021, they're going to make even more gains. Honestly, this is my opinion. You know, obviously it's not financial advice. That goes without saying. I don't know why, you know, I guess we have to say it on YouTube, but these financial channels, like, yeah, we get it. It's not financial advice. But I mean, it's like, it's trading advice. It's market advice, whatever you want to call it. In my opinion, and it's just my opinion, the market is at extremely dangerous levels. To start piling in now, hoping for you know, another push, another bull run, it's extremely dangerous. It's not that you can't enter the market now. You could, but you need to be extremely thrifty. You know, even going back to the 1920's, the Witch of Wall Street, I forget exactly what her name is, but the Witch of Wall Street was this woman, and you know, she got rich, I think in the 1920's, in the stock market, and she said she did it by being extremely thrifty with her purchases. And you can do it. There are deals out there. There's undervalued assets. There's undervalued stocks, undervalued equities. In my personal opinion right now, I think the uranium market is a little undervalued compared to where it was a couple of weeks ago. We had a huge pullback. I think the metals mining market is undervalued compared to where we were a few weeks ago, because we had a major pullback. But there's other things out there that you might find, you know. Dominion Energy. I'm waiting for Dominion Energy to maybe fall into a weekly demand zone closer to about $70. I think it's a little, it's at $75 around there. You know, but there's utility companies. CleanSpark is another equity that I really like for the price that it's at right now, you know, especially being under $20. You know, there's a guy I watch, Rex Finance. He's adamant that, you know, in his opinion, that CleanSpark is going to be a $100 stock by the end of the year. There are undervalued assets, but it's extremely dangerous to just start piling into the S&P, going long on these, you know, blue chip stocks like the banks, even oil right now. Like oil, I know the price of oil is going up, but the oil stocks are kind of consolidating. They might pull back. So you want to be patient, right? The whole point of this video is patience. Patience will pay. I know the feeling when you see something pull back, you know, for the first time in months, right? And you're thinking, oh, I gotta buy 10 shares of this now, or 100 shares of this, depending on what it is or how much it is, how much you have. And then, you know, you enter, and then a couple days later, it pulls back even more. And you think, well, damn, like, I should have just waited a couple of days. I was too early. You know, I know a lot of people don't like to try to time the market. But, you know, if you're going to be actively managing your money, you have to try to time the markets. You have to try to look at the technicals. You know, if you just want to be a passive investor, put your money in a mutual fund, you know, Dave Ramsey style or whatever, and let somebody else handle your money. I mean, that's one thing. But if you want to be an active participant, if you want to be an active investor, if you want to be active trading, you really have to pick your entries. You have to be patient. Even with the exits, sometimes you have to be patient. But the thing is you know, you've got bulls and bears, but you also have pigs, right? They say bulls make money, bears make money, but pigs get slaughtered. I'm very concerned about the stock market because, you know, when it's making all-time highs day after day, week after week, it can't sustain itself. Like, nothing continues to go up without coming down. And we saw kind of a flash crash, which I think it's foreshadowing what may be to come. I know historically, the first year of a new administration, the summertime, the stocks are usually pretty bullish. This is just like a historical statistic or whatever. You know, when you look at the charts and you read into it, because Biden's in his first year, this is the first summer of his administration, you know, that is bullish for stocks, historically speaking. But this is a completely different situation. And let's say, right, let's say the market crashes and doesn't recover for decades, right? Because you got to think we've been going up, 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 up and up, day after day, week after week, month after month. I think it's been what, like 5, 6, 7 straight quarters of the S&P 500 gaining with no pullbacks. This happened in Japan, right? People think it can't happen to the American market, but it happened to Japan. Japan is still trying to recover from falling, right? The highs in the 90s have still not been reached yet. The Japanese stock market hit highs in the 90s, and the market has still never recovered, right? The Japanese stock market. So we know it's happened before. This is the other thing that makes it more probable that this could happen to the American equities. And let's say the American equities don't necessarily crash, but let's just say they chop around. Let's say they, you know, kind of pull back and then just chop around for decades. That's possible. So this is why you need to be patient. This is why you must be patient. You must be extremely thrifty with your entries. Be like the Witch of Wall Street in the 1920s. Be extremely thrifty. You know, you might see a stock and you're like, oh, this is a decent price. I'm willing, you know, to buy this for this price. But is it really undervalued? Is it undervalued compared to other things like maybe commodities or, you know, thinking about the ratios? And, you know, you could see something pull back and want to enter when it has a lot more room to pull back. You may as well just wait a couple days or wait a week. And there's no parking on my street. I'm gonna have to back up. Park in the parking lot. That's annoying. So yeah, that's the whole point of this video, guys, is that, and as you can see, they're doing, look at all this construction they're doing. Look at this. Look at all that construction. You see that? They've been working on the sewer systems for, look at this. This is what our whole, like, place has been torn up for months and months and months now. They've been working on the sewer systems. But, you know, once they get it done, they won't have to do it again for another 100 years. My point is, guys, is that, and I know I'm vlogging while backing up, while driving. Hate on me if you want. My point is, guys, is that you need to be patient and you need to be extremely, extremely thrifty. I know I've said that a couple of times now, but I really want to drill it into everybody's mind because I need to do the same. I'm saying it for myself, right? I wanted to enter a bunch of mining shares, you know, uranium and silver a couple of days ago, or this was like a couple weeks ago. And I actually did, but then I had to liquidate the portfolio because I lost so much money in my trading account, which I've now gotten back. But I'm glad I got out of those mining shares because what happened? They fell even more, you know? And so I truly do believe mining is undervalued right now. And I believe, you know, SILJ could be a $100 stock in 5 years. I truly do believe that. But being thrifty, you know, it's hard because you want to press the button. They make these, you know, Robinhood and TD Ameritrade, they make it so inviting to, you know, it's like a game. It's all gamified. You want to be involved. You want to make money. But I'm telling you guys, You know, if there was one major thing that I've been doing wrong since I got into this, it was not being thrifty enough with my entries, especially when I'm trying to go like long on something long term, and not being thrifty and not being patient for the best entries. This is something I struggle with trading, right? With just like scalping. You know, I get in for, let's say, 200 right at the open. It drops to 150, right? The option contract, and then goes to 300, right? Well, I'm in at 200. I have to stay through this pullback, and then I can sell up at 300. But if I had just waited 15 minutes, right? Waited for the morning dip, I could have gotten in at 150 and made 50% more. So, you know, these are the mistakes that I've made over and over and over and over again. So yeah, I am concerned about the stock market. I'm concerned about the all-time highs every single week. You know, it could continue, but it could also not. We know the Japanese stock market crashed in the 90s, still has never recovered. It still has never recovered those highs. Okay? That could definitely happen. Be thrifty, especially with your long-term entries, and be patient, especially when you're trading. Let me know what you guys think. What's going on? You know, do you expect the market to continue this bull run this summer, to continue to edge up higher? Do you think we're going to see some flash crashes? Let me know what you think is going to happen down in the comments. And as always, until next time, God bless.